Everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive in there. We're going to take a look, see what people are sharing, and I'll make opinions on it. If you want to follow me, it's at Finance. If you want to join our community, finding-value.com, where I dive deeper into the topics that we discuss on a regular basis, mainly commodity driven, looking for potential investment opportunities. We talk a lot on Discord in the community, and you can ask me whatever you like. I cannot consult individuals one on one, but I can tell you what I'm doing, what setups I am seeing, and you can follow along if you would like. Coupon code Mayday if you're interested. So finding value, that is myself. Gold, strong like bull. Big move. Look at this big move, the breakout here. I remember specifically talking to people on the website, and we were sitting on top of this breakout here, and I said, "Hey guys, we're sitting on top of a pattern here. It's ready to go. It's ready to go." I know that we were buying in October 2022 some of the falling wedge patterns in the companies. Falling wedge patterns right at the tip here. A couple of silver companies and gold companies specifically. And they are up, some of them are up well over 100% from this point here, and even from points in through here from where we are today. Some of them are up almost 200%. They're coming into, well, I should say over 100 something percent, over 2x. And then here is kind of zooming in on that right hand side. We are breaking potentially up to the upside of a rising wedge, which is very powerful move that gold is undergoing here. Looking really good. Moses Kagan says, if your consciousness, you're going to stress about work regardless. Might as well arrange your life so that you're stressing about work with the potential to make your family rich. There's actually a lot of value in what he just said there, and I'm going to try to reword this. A lot of people go to work and they stress about work constantly. I see a lot of people stressing about work that are friends, spouses of friends that stress about work when I talk to them at get togethers and stuff like that. And, when I look at them and I look at how I invest for asymmetry. Asymmetry means that I look for potential investment opportunities where the reward is much greater than the risk. And that's where I spend all my time finding that risk reward, and then I multiply it by the probability of success. That is the equation. And that is the equation that I have applied to all my investments. I look for big upside returns with very little downside risk. And a lot of that is mitigated by when you purchase the equity. But nobody applies that same thinking to their real life. No one applies to it like, I'm coming in here, I'm busting my butt, and the best that I'll get from this job is a very small raise. Maybe it's $5,000 a year raise. Maybe it's $10,000 a year raise. The question is that enough for you to bust your butt? And is it enough for all the stress that a lot of people undergo? What is the potential upside in the job that you have? Is the risk reward good enough in your life? And that's what drew me to investing. It drew me to investing because I knew there wasn't a cap. I knew that if I developed the skills to become a good investor, that I could make tens of millions of dollars. Yes, tens of millions. I had no job in my 9 to 5 life that ever offered that type of risk reward, ever. So there's a huge thing in this saying that probably people just skip right through it. But it says, might as well arrange your life so that you're stressing about work with the potential to make your family. He says rich. I'm going to say make them wealthy. Wealthy is a combination of free time and money. Rich is more focused on just money. So it's about enhancing your entire family's well being. And that's what I think people are selling short. They're selling short the opportunity for you to become wealthy enough to change your family's well being. And that's why I started the channel, if you guys want to know. I started this channel, I started the website, I started all these things to make everyone, to give people the opportunity to do that, to learn how to do that. So Nostradamus says, let's take a moment to reflect on the negative Nellies over the past few weeks, who likely caused many to sell and walk away days before the start of the biggest bull in the history of uranium. Silence. Ugh. What I've learned is it's not about taking, this is what I see, this is what I observe. I observe a bunch of people who are completely impatient. And again, that's where the quote from Warren Buffett comes from. The stock market is a wealth transfer mechanism from the impatient to the patient. And that's all I see is a bunch of people who haven't really, it seems like they haven't accomplished anything of great, I'll call it something that takes a lot of effort and a lot of time in life. I used to work out quite rigorously. I don't work out as rigorously anymore, but I used to, my deadlift, I think I got up to about 650 pounds, I think was my biggest deadlift. I did not go on, any juice or steroids or anything. A lot of my lifts focused around rehabbing and making sure that my joints were strong. And then the other ones were the strength builders. So you had strength builders and you had the tertiary lifts that basically kept you healthy, kept your joints healthy. It kept all of your joints inside of where they need to be. And that it takes a long time to do that. It takes a discipline. And I think that discipline can be applied to investing. That also occurs in sports too. I played a lot of sports. So I was doing all this, and a lot of stuff doesn't happen overnight. You have to practice a lot. Stocks are the same way. Stocks require a lot of patience, and it's not going to. It's out of your control, and the timing is out of your control. So you have to do what the market demands and requires, which is buy when people aren't looking, and you have to be patient enough so that that investment works in the end. And almost everyone doesn't want to do those two things. And that's the exact reason why it works. The exact reason it works is because everyone else is unwilling to do it. And that's where you have to live. You have to be, quote, be contrarian. Strip Mall Guy says, honest question for parents with young kids. Are you really going out much? Thought my wife and I would be going to dinners, shows, meetings, friends, etc. as we raised our kids, but it's a couple of times a month max. Both kids are under 5. Turns out we're totally fine staying home. You have to give up your old life when you have kids. You can't just go out whenever you want. They need you. And the most important time for kids is when they're under 5 years old. All of everything that they kind of learn and do, they learn before, the most important years are from 0 to 5. So if you decide to have kids, you need to be there for them, period. You need to hug them. You need to love them. You need to do all these things so that they can be successful in their life. It's not it's not about sacrificing. It's about having kids and wanting to have them, in my opinion. So it's going out is it's not a big deal. And you don't want to go out and bring kids that are like 0, 1, 2, 3, because it's kind of a pain in the butt. They get up out of their seat, they run around, you just have to keep yelling at them. It's like, God, calm down, guys. And they're all, juiced up with energy, which is great. You're supposed to be. But yeah, I would say this is completely true. And if you're young, just realize that if you're going to have kids, you're going to have to, you're not going to be able to do some of these things the way it is. You're not sacrificing. You are changing your life to ensure that your kids have a great future. And I would totally hang out with my kids. I love hanging out with my kids. So I'm willing to do that. Mark says further to last week's note, Shanghai SHFE copper inventories dropped another 20.5 thousand, I think it's million tons, last week, now down to 164,938. The China demand weak bear narrative is falling apart as the market gets back to normal. And here's their inventories depleting back down as they're drawing from inventories to more normal levels, at least normal for the past 5 years. Eric Nettle says, pretty amazing that despite record low global inventories, Chinese demand bottoming, Russia-Iraq compliance improving, much of Libya remaining offline, Fed rate policy inflecting, and Israel-Hezbollah tensions at new high, that the paper demand for Brent remains negative. Well, that's just what the market does. You can't change the market. I have an opinion on the oil market, but it doesn't mean that everyone else shares that opinion. And that's okay. But all you can do is say, this is where we're at. This is what the inventories are at. And if you're bullish, well, take a bullish stance on it and buy equities if you think they're cheap and you think the market has it wrong. And that's what we're trying to find. We are trying to find where the market has it wrong. Where are the cheap sectors and locations, and where are the expensive ones? Avoid expensive, buy cheap, and then you have to be patient for that market to change their mind, for the market conditions to come around into our favor. Now, maybe the market's right. What if they're right and we get a slowdown? Well, then you can say that everyone's already negative and oil price is already cheap. Maybe it's already priced in. So that's a good and a good for me. And that's also reasons to adopt certain strategies where you might not be right 100% of the time. Maybe you don't buy everything in one shot. Maybe you have to cost average into positions. There's all these things that you can do to mitigate it. The best investors, in my opinion, are the ones that don't have to be right on prediction calling and have strategies in place where they can benefit from lower prices. And they take a long enough time frame to benefit from a market sentiment shift. The Hedgeless Horseman says, I'm extremely stressed, not because juniors are not moving so we can look smart again, but rather because once they start moving, my money invested will never have such high expected return in my life again. So basically, he's saying an opportunity and the asymmetry in that opportunity is so good right now that once it starts to move, that opportunity will leave us. It says this is one thing. Once this is gone, it is gone. We can't go back in time and take advantage of it again. This is the highest margin of safety, highest future expected returns environment we will probably see for the rest of our lives in relationship to gold and in relationship to the mining companies. And he's completely right. And again, if you guys need help to take advantage of this, if you want other people's opinions, join our community. I can help you. That's all I can say. This once it's gone, it's gone. And I took advantage of this every single which way, upside and down. And some people, what I get responded with sometimes is, well, platinum hasn't gone up yet. It's like, it will. It'll come. And once this is gone, it is gone. You will not have this same opportunity to buy some of these assets as cheap as what they are today. And maybe it swings back around one more time in our lifetime. Maybe. But most people, depending on how old they are and how this plays out, you only get a couple of commodity bull markets in your life. That's it. You can put it on one hand, and you might only get three, two or three. That's it, depending on when you came in and when you exit. I came in the middle of the first, for me, the 2000s commodity bull market. I came in the middle of that into money earning years where I started to invest. I didn't know what the hell I was doing then. So obviously, I licked my wounds after that and tried to learn from it. But these opportunities don't come very often, and I can help you. I've studied this quite a bit, and I think I've got what would consider to be some of the best companies. And I'm going to ride this thing with a good chunk of my money. High Heat says U.S. shale oil has seen its best days, and what happens next is going to knock your socks off, says Mike Shellman. I don't know who Mike Shellman is, but I totally agree with the quote. I think over the next 5 years, we are going to see an entirely different oil market. I am completely bullish on precious metals, and I'm completely bullish on the oil market. Now, is oil going to take off this immediate, short term? I don't know. And people who think they know, good luck. But what's coming in the oil markets, I think, could be life changing. I think that we could shift an entire paradigm shift from riding the cost curves of oil to demand destruction, and maybe eventually a more permanent demand destruction event later in the future, maybe a decade away. We'll probably crash a few times at the top. Markets will go into recession and all that stuff if we hit constraints in oil, which I think is coming. So that's what I think is coming. And this guy is basically saying the same thing. US shale oil has seen its best days, and what happens next is going to knock your socks up. And I think that has to deal with depletion. Gold rose nearly every day for 4 years in the 1970s. Think about that. Something similar could be coming like this. What are you going to do? What are your plans? How are you going to buy? What companies do you own in it? Are you taking enough risk? All of those questions should be answered. I think I've got a decent amount of risk in the portfolio that I'm acceptable doing. And hopefully I added enough. I think I added enough where it's going to make a very big difference in my life. And I also am playing this with the physical metals in size because that's the least amount of risk. And I think the rewards are absolutely fantastic in it. Did you know that gold did I think it was a 23 or 25x in the 1970s from bottom to top? Did you know silver did a 50x? Is a 50x not good enough to be in the physical metal? I think it's plenty good. I bought the bottom in 2018. I was buying $14 silver, $15 silver. I bought a whole bunch. I've been waiting for this day here, guys. And some people will say, well, that was a lost opportunity. I don't think so. I was buying whatever. I bought Eagles for $1.50 on sale over spot. It was cheap. Mature men who are 25 plus, please drop one piece of advice to men between 18 and 24. It can be about anything. One of the things that we covered earlier about asymmetry, choose a job that you like/love and choose something that has a lot of upside potential. Don't waste your time. When you're between 18 and 24 years old, you have the most amount of energy that you'll probably have in your entire life. I mean, you can go out into your 40s and 50s, you'll still have energy, but 18 to 24, you can do anything. All I'm going to say is don't waste it. Have fun. Don't sit on a computer playing stupid video games all day. Get out, have fun, use that energy constructively if you can, for whatever it is. It could be for enjoyment, it could be for work, it could be for anything. Use it, is what I'm going to say. Once you get about past 26 years old, you start to feel a little bit different. It's almost like you can't do those all-nighters anymore. You got to you slow down a teeny bit. And then it just continues to slow down over time. I was the strongest at 33 years old. You are going to hit 34, 35, 36. Things are going to feel like the world beforehand is always getting better. You're getting stronger, faster. Things slow down at 34 a little bit, mid 30s. So you got to use that to your advantage. George Gammon says, reduce consumer demand with unemployment at 4.2%. This is what leads to layoffs that make the unemployment rate spike, which reduces consumer demand further. Ironically, if we have a recession without a crisis, the central planners will probably do very little to make it worse. Here is something that I do want to comment on, and this is the jobless claims and all that stuff. All of these immigrants that we have, or migrants, immigrants, however you want to say it, all of these people that are coming to America, they're not on the books. So if they get a lot of the jobs that maybe people that are here that are being tracked, what if they're getting all of the jobs and the people that we are tracking that are losing jobs are showing up in the stuff that we track? What if the total amount of jobs are not going down? What if they're still decent? And all we're doing is we're swapping illegals here for legal people. Does that mean we actually are having a slowdown? I don't know. It adds and muddies the waters quite a bit with some of the numbers. But that's all I wanted to make a statement there. My hot take is people don't mind offices. They hate commuting, though. If everyone was able to live comfortable life within 15 minutes of walk, train, drive to their office, they would probably go in more. But this is reserved for the upper management and leadership that can afford to live near work. Um, I disagree with this statement. Yes, this might be true, but it's not reserved for upper management and leadership because of where they afford to live near work. I've had leaders that didn't even live in the same state that they worked in. They would commute every single week to their job and back because they didn't like the location. And they were just doing it for a short time clip. So one of them lived in Washington but worked in Minnesota. Another thing is a lot of people get, since a lot of families need two incomes, you have two people working. The likelihood that both people are comfortably within the 15-minute walk, train, drive can be very low. I know many people here in Colorado Springs where they work, the guy or the girl works in Colorado Springs, and their significant other works in South Denver. And they live somewhere in between. That's not 15 minutes in either direction. It's going to take longer than that. So they're stuck between having jobs in one location, but having both people work. That's where things break down. Yes, people can go into the office, and yes, it's much easier if one person can work from home. And I think that's where the big deal is. I don't think it's an affordability necessarily problem because 15 minutes from most locations, you can find something that's affordable. Philip Neat says, unbelievable news. Microsoft Corp taking 100% of 3 Mile Island's restart will impact supply and demand discussions across the board. Rooms of all AI companies, Yahoo, Google, OpenAI, Meta, Amazon, Nvidia, etc., even Tesla. Uranium, U308, SMR contract announcements will follow. And here is massive news and a clear continuation of nuclear revival trend that we see in the West. So they're talking about the revival of the owner shutter 3 Mile Island nuclear plant in Pennsylvania and the 1.6 billion to revive it. So this is what's coming. These AI's coming, it's power hungry, and they're going to look for power anywhere they can get it. That's what's coming. Now, I know a lot of people, they're on the uranium bandwagon. I am too. Natural gas is going to be another one that benefits from this. So uranium, nat gas is cheap. So I think we've got a couple of investment opportunities ahead of us. And we're playing all of those themes, again, on the website there. Michael Gayad. Now, this guy, I added him, and he puts these stupid things like this. Gold is sending a warning. And he's like, look at me, look at me. Guys, this is pretty annoying. This guy, obviously, he lost a lot of weight. Congratulations to him. But he is one loudmouth guy trying to grab everyone's attention. Look at me, I'm fasting. Look at me, I'm working out while I'm fasting. I'm just going to say his form didn't look too great, is what I'm going to say. But don't do this. Don't be a loudmouth. Don't be putting these posts like this, trying to grab everyone's attention. Just calm down. Calm down. Cross-border capital says, nay, that is wrong from the horse's mouth. So this is bank credit, all commercial banks. Look at how it was kind of coming down like this. In 2023, bank credit was coming back down. Fiscal spending was making up some of the difference. But now look at it on the right-hand side. Boom, huge move in 2024, and it's starting to move on up for bank credit, all commercial banks. This is liquidity. This takes a little bit of time to get into the banking system here. This is a slowdown. So that ended at about it's February 2024. This could be the slowdown that we are experiencing is this over here. It takes about 18, 24 months to work its way through the system, to really work its way through the system. Maybe a little bit quicker, maybe 12 months. So 12 to 24 months. So if you add 1 year from here where it really started to take off, the bottom was in 2023 at the end. So our bottom is probably December of 2024, maybe, maybe a little bit behind that. And then we're going to see this come into the system. So it's all coming. Gold's accounting for this. If you want to know why gold's ripping, gold's accounting for it. Trader says mortgage rates should head towards 4% by the end of 2025. If you wait, you can snag some good deals 20 to 30% off. Rent for now, home prices are going to fall very soon. Conservative estimate is for a 30% decline by 2025. Is this guy on crack? We've never had a decline that big in the history of the housing market. Maybe back in the 1929, crash. I didn't look at that, the actual decline. There's no way we're getting a 30% decline by 2025. I am sorry. That would require foreclosures that we don't have. That would require an absolute complete fallout of the housing market. If you are reading this stuff and you actually believe this, you are setting up your life for something that's never going to materialize. What I would do is I would buy a house before the rates fell, then I would refinance when the rates fell, if I could afford it. That's what I would do. I don't think home prices are going to fall. I think the best time to buy would be now if the market is weak where you're at. But that's me. Not advice, and each person needs to look at that from their own perspective. But I would buy, and if rates come back down, I would suspect that some of these areas are going to strengthen quite a bit. That would be my guess. Christine says, at a social event tonight, this is how the conversation goes. The op says, what do you think about the election? She said, I don't know who will win. They are both bad. The other person says, but what about oil and gas? It says, it won't matter who gets elected. The outcome is the same. Why would she have that statement? Because we are at the cost curve of oil. Oil can't get any cheaper, guys, for a long-term basis. If it gets cheaper, the supply will decline. We are already at a super cheap level. So there's nothing that they can do to make oil cheaper on a sustainable basis, unless we have some sort of technology come out of the woodwork and completely redefine how oil gets taken out of the ground. We're already there. And that's what she says. Rick Rule says, gold insights from one of our top chartists in the industry, and he's got a parabolic move in gold. Yeah, it's starting to rip. It is starting to rip. That's Peter Brandt, if you want to know who that is. Minsky Moment, he says, Moab, so the mother of all artificial asset bubbles is almost over. He says that there's a double top at the highest market cap to GDP in American history, which is 200%. Sleep well. And there's the move from 1970s, early 80. There's your bottom, 82. From 82, we ripped all the way above. We had one big consolidation, an ABC correction, and another big move. We are doing this same move in commodities. We had this move that started in 2000. We had a big move up. We had an ABC correction, ABC correction, and then we've in 2020 was the bottom here, and then we came on up and we've done that move right there, and we're right here in a lot of these areas, and we have all of this to go left. That's where we're located for commodities. It's the same fractal. It's just shifted different for commodities. So this is Forbes now. BlackRock reveals it's quietly preparing for a 35 trillion Federal Reserve dollar crisis with Bitcoin, predicted to spark a sudden price boom. This usually occurs at tops. This is what it looks like. Central top. And that's what I've got for today, guys. So that's all I've got. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you're interested. And we'll catch you next time. This is Finding Value.